Scott. It's great to meet you. Welcome to The Cross by Venture Capital Cross.
Hey, how you doing, Joseph? I'm glad to be here. Thanks for having me.
No problem. Why don't you tell our audience about yourself and your career, which is
Uh,
really interesting.
again, thanks for having me. I've been a yacht captain over the last 20 plus years. Been doing yachts for around 25 years. Been doing multifamily real estate for about five. Um, Started off in single family and stuff, but I really started in real estate because, as we were discussing before we came on, that yachts in general are a fairly stable, but unstable business. You can be here today, gone today, because we're really working on someone's wealthy person's toy. And if business goes bad, or they lose interest, or the economy goes bad, the boats are usually the one of the first things to go. So I've always had other things, side hustles or something that to bring in some income, because if you lose a job, you got to go hurry and get the next one. But if you have some passive income coming in, then you're not, you can kind of pick and choose and be a little more, have a little more scrutiny on the next job. And that's how I got here.
Are you how busy are you when you're on the boat? Like, for example, if you're going to the Bahamas and it takes an hour or 2 hours or whatever, do you have to kind of focus on driving, or is it kind of automated?
Well, I mean, we have autopilot, but you have to be pretty vigilant. The traffic can be pretty heavy, and weather and all that stuff. I mean, I just got back from there yesterday. I flew back. My flight got delayed and everything, but um, we did just done an extensive shipyard period, which is, we did refit a lot of equipment, and boat had been out of the shipyard for a couple of years because we were just constantly moving. We went to Alaska last year, and there's a lot of backed up heavy maintenance and a lot of things that we had to do. And then there were also some changes that the owner wanted that we needed to get done. We basically had about 5 months worth of work to do in 3 months. So we
Wow.
got it done, and we were pretty much literally, it's myself and another captain. We rotate 6 weeks on, 6 weeks off. And we were literally, before the guests were showing up, we're still putting stuff together. Literally, as they're walking down the dock. So it can be pretty busy. Other times, less so. But with the real estate stuff, I schedule that around what I'm doing. You just have to have some more time management.
Is there overlap between the yacht business and the real estate, as far as meeting people or investors or anything like that, or it's kind of two separate worlds?
Surprisingly, there's a lot. I mean, there's a lot of the reason why I started a meetup group, Yachty Real Estate Investors, in Fort Lauderdale, and I've since collaborated with like-minded another group that they're going nationwide, but our meetups are mostly in South Florida. And um, we I found that I didn't know a lot about real estate and stuff. So I mean, in the last 5 years, I didn't know a lot about multifamily stuff. I had done single family stuff, as my family got bigger, bought another house and stuff. But there's surprisingly a lot of yacht crew that own real estate, whether it's short term rentals, mixed use, commercial and stuff. And I didn't know a lot about it, so I wanted to make sure that other people knew about these options and opportunities that are out there, because if I didn't know, I'm sure there's a lot of other people that didn't know. And I'd like them to at least have that option, or at least see that those things are available. Because at one point, I even though I worked for a really large real estate development as a yacht captain, I didn't know that this is how things work. That it was just a lot of people collaborating as a team to purchase these larger multifamily apartments and commercial real estate. So if I didn't know, I'm sure there's plenty of other people that don't know, that do the same work.
What is your role in the syndicates? How does that work with what you are you the investor or the GP or a combination of both, or researching deals, or a little bit of everything?
I do a little bit, but my focus over the last year and a half has been focusing on the capital, resourcing, equity sourcing equity and investor relations, because I found that, while I'm on the boats, I can't really guarantee that I can go and walk a property, or go and do some of the other things. I can help with some of the due diligence stuff, but I help out where I can. But my focus mostly is investor relations and raising capital, because I've found that I get more traction that way, and I love talking to people and meeting people, and like I said, just letting people know that these options are out there, and and it's been really a really great positive experience for me.
What's the average investment size or ticket size that for deals that you guys do?
Right now it's about 50K. The one that we are doing now is oh, no, not deal size. You said deal size, not
Well, no, tickets
or
meaning investment size, like, well,
investment
both.
size. Okay, okay. The investment size right now for the one we're working on, it's 100K minimum. I've done some 50. 100 is kind of where it seems to be a little more of a sweet spot, but we're working on properties that are anywhere from 10 to 30 million. But we're looking at going bigger, because it seems that these larger assets seem to be more popular, and people like and more stable. There's a lot more economies of scale there too.
Do you think there's any overlap in what you're doing and what I do with private investments and private companies, like venture capital deals, or not?
Yes, I think so, because all things are not for all people. And people like to be diversified, and I personally like to see and learn about new options, and opportunities, because they're all kind of, the structures can be kind of fairly similar, and just the numbers might be a little different. But business and real estate, a real estate property or a multifamily property is really kind of a business anyway. So a lot of it's similar.
Yeah, traditionally, what people would normally say is that venture capital is pure risk, and what you're doing is more conservative. But I know a guy that invested in a Chicago apartment, and I don't know what happened, but he had 100% loss from his investment from because during COVID, like they couldn't rent any. It was a commercial
Yeah,
deal, and or it was an apartment complex, but it was a big project, and
yeah,
so I don't know real estate so well like you do, but it's the venture capital side of things is just really betting on companies that are going to grow.
yeah,
And if they grow, then people make money, and if they don't, then they lose. But
yeah,
the math is kind of like the big venture funds, they throw lots of money at lots of deals.
yeah,
And how do they invest in Airbnb and Uber is they don't know who's going to be the next Uber, so they have to invest in thousands of deals,
yeah,
betting that one of them is going to be huge. And most of them will maybe break even. They won't all be losers, but overall they'll average out. And but they have lots of capital, so the average investor can't really do that. I mean, you need either lots of capital or you need to make a really good bet. And I've always felt like stock picking is really hard because how do you
yeah,
know? I mean, Nvidia is great, but it's so overvalued. You knew it was going to blow up at some point. There's valuation. It's a complex market. So, um, but real estate is really popular. So
hmm,
they're kind of, yeah. I mean, like you said, people like to diversify, so you can put a little bit in
yeah.
different places.
Well, I don't know a huge amount about venture capital, but my friends that are into it, they, I know they have kind of somewhat of an 80/20 strategy. Eight of the companies probably won't do very well, but if they're looking at for those two that will overwhelmingly supersede the bottom eight. So I know with us, we can't really fail or we're out of business. So I guess that could be a big difference between that, because if we fail, people go without homes and stuff like that. Then they don't have a place to live or a bad place to live. So it's, I guess the key, like anything else, is with the venture capitalists, it's all about the operator, the person that can choose the right opportunity. It starts there, with the jockey.
Yeah, it's management is one of the most important considerations early stage companies. Because so, what prompted your interest to reach out after you saw the podcast or the video?
Well, it looked pretty interesting because I don't know a whole lot about VC and venture capital and stuff. And I never turned down an opportunity to meet somebody and talk to people because you never know where it's going to take you. Because I've met so many great people, and I just keep wanting to meet more and more people because the more people I meet, the more stuff we can do together. It just keeps growing exponentially. With the human capital side of everything.
Cool.
Yeah. Um,
Did you have any particular questions or things that you're interested in venture capital or compelling
I was
something?
Well, yeah, I was just wondering, because I always like to know what people's sweet spot is. What's your focus? What do you see like going forward? In the next 5 to 10 years, that would be a good. That's a You see something coming on the horizon that hasn't really been there before.
That's a kind of a tough question to answer because there's a lot of interesting things going on.
Yeah.
But almost all the companies we're working on are, it's basically a one-sided market. So what happens is when companies are really early stage, no one knows how they're going to work out. And I think it's like from all the companies that get seed funding, um, only 10% get to a Series A. And out of Series A, only 10% get to a Series B, and
Wow.
so on and so forth. Um, they're not all failures. They might get bought. They might change their pivot to something else. Kraken is called Pay Send, I think. Like when Kraken started, it was a payment service, and then they pivoted to
Mm-hmm.
crypto. So everyone has a different strategy with venture capital and how to pick companies. But as they get later, you have more credibility. There's basically I'll send you a chart. There's a declining risk and reward curve that's like a diagonal line, which means if you invest early, it's huge risk and possibly huge return. And then the later a company is until IPO, the more mature it is, it's going to be less risky, but you're going to make less return
Mm-hmm.
because, like for example, SpaceX is a $230 billion company. So for it to double, it would have to, it's different doubling when you're that size. It's harder to double than when you're a
Mm-hmm.
$10 million company. And but it's more safe because they've already proven themselves in that you're not taking the same risk as a seed investor. When SpaceX was really early, most people thought that it was going to fail. They
Yeah.
thought that he was a crackpot, and that the idea of reusable rockets was just crazy. Same thing with Tesla and other companies. But so like you said earlier about the operator, the only thing that Elon had with SpaceX was his success with other ventures, and they backed the manager. But over time, then you can see what's working. The problem is the more successful a company is, the less people will like to sell. So my job is usually finding sellers, not finding
Mm.
investors. Like in real
Mm.
estate, you're mostly trying to find investors for deals
Mm-hmm.
because it's a pretty common asset. I mean, Tennessee is
Yeah.
different than Florida, but multifamily housing or whatever the market is going to be similar in New York or Utah or wherever,
Mm-hmm.
minus a couple like rules. But with something like this, SpaceX is vastly different than uh, Airbnb or Uber or Palantir or something else. Um, so what I usually do, like a strategy, is I just go where I'm a terrible salesman, so I go where the demand is. And so, like SpaceX, as an example, I mean, I love the company, but more importantly, there's more demand than there is supply in the market.
Mm.
There's more buyers than there is sellers. So the game is kind of finding someone who wants to sell because if the owners know the stock is going to go up, why would they sell?
Mm-hmm.
So it's a different kind of mentality. And then you have companies where there's all sellers. I don't want to name any names, but it's basically a one-sided market. There's all buyers or all sellers.
Okay.
And the deals that when there's never any dividends. I've never seen there's one time I saw a company pay a 8% dividend. It's super rare. So it's really, you're just betting on the equity rise.
Okay.
And
I guess that's why it makes it much more risky because you're just betting on the appreciation, long-term equity gain.
right, you have no, yeah, and you never know how that's going to go,
Yeah.
and you have to get into valuation. And so a lot of the investors in private markets do very hard analysis on like financials, like book to book valuation of a company. Like if you're making 10 billion a year, what does that make the company worth, and things like that, like you would do on public stocks.
Mm-hmm.
But with private companies, there's no information. So when you
Mm-hmm.
get a real estate deal, you probably have a breakdown of all kinds of
Yes.
just extensive
Metrics. Yeah, they
metrics,
have a lot of metrics.
demographics.
Yeah. Yeah.
And for private companies, you get nothing. You don't even you don't get anything.
Oh, man.
So there are third-party data services like PitchBook and other third-party where you can get access to data, but it's not going to be
Accurate.
from the company. So
Ah.
it's objective. It's usually pretty good, but it's not like for Apple stock. You can find out all. It's so detailed
Yeah.
what you can get for any publicly traded company, and for private companies, they don't release that data because they're not required to. So it's a whole different thing. So there's a couple approaches to it, but like AI, I think has been really overvalued in terms of a lot of the private, like OpenAI and a lot of these companies haven't really produced demonstratable products that are really meaningful.
Yeah.
Like the AI art is cool. I make some of it,
Yeah.
but it's not
Changing the world. Yeah.
It's not
changing the world.
Yeah, it hasn't really. We've invested 50, 100 billion, or I don't know how much total, hundreds of billions, and so far we haven't seen anything. So there's a lot of hype and hope built into the AI valuations, but probably 90% of all the capital in the last 2 years has went into AI because the market's been really soft.
Yeah.
In 2021, it was good. And then in 22 and 23 and this year, it's been real soft with AI and SpaceX and a couple exceptions. So
yeah, I think that's the way it's been with all the way around. There was so much money flooded in 2021, 22, and the end of 22, it's kind of started softening up. And like you said, there's, people got tighter with everything. And then election years are always soft anyway, because people get freaked out about a lot of stuff that, for me, I don't see anything revolutionarily changing. Or I don't know if that's even a word. any, any revolutionary change happening immediately after, regardless which way the election goes. The government moves slow, so things don't change very rapidly.
well, it seems like the sentiment is picking up, and that's positive.
All the teams that change is people's mindset the day after. Half the people think one way, and then the other half think another way, and their mindset has changed, shifted a little bit. Everything's great, or everything's terrible.
Well, there's two things that affect the currency, and it's the Fed and it's the White House. So we've had a lot of inflation, both from the Fed and from the White House. That gets not a lot of coverage is the commodity inflation. When we put sanctions on Russia, they're the largest oil producer in the world. It secretly shot the price of goods up significantly because the average tomato travels 1,600 miles before it goes to your table. Yeah, and that's a good metaphor for the whole economy. We, in America at least, we use trucks and gasoline to transport 99% of everything,
and trains.
And probably yachts. I'm assuming yachts also use gasoline, right?
Yeah, we use diesel. It's same product, same petroleum.
So all of these shipping problems, logistics issues, supply chain issues, you can argue that it was artificially created, but the point is that creates inflation, and that's bad for the economy. So if we have a White House that's going to tamper inflation, that's going in the other direction, that'll be super positive for markets.
Yeah.
because if you look the last year, we've seen lots of bankruptcies like
Hmm.
restaurants, retailers, and the reason is because those businesses rely on really small margins,
Yes.
and the inflation, they can't just raise
No.
prices like it, so they just
No.
went bankrupt. And so that can be really good for markets, and because the last year, 2 years have been
Yeah. The
really,
last. Yeah, inflation's been very high. And one thing that I tell people all the time, just because inflation goes down doesn't mean the prices are going to go down. So you'll still see some of the pain left over from that. Unless inflation goes negative, and that is a huge, and that opens up another world of other problems in a deflationary environment. That's not good for any of us, really. Um, but yeah, I mean, for me, things don't really seem to move that fast. So, I'm going to just do whatever the best I can do, and then I'll just pivot to whatever I need to do to make things happen, because I'm not in control of any of those things. I can't control any of their inputs, so they're going to do what they're going to do, and I'll just act accordingly to do the best solution for myself and my family and everybody around me, because that's all I really can do anyway.
yeah, that's good advice.
Yeah. I mean, I can't get, a friend of mine said to me, you can't really worry about things you can't control. And you really, if you do, you can get wrapped up in a lot of those things that aren't really just taking up space in your head, when you could probably have come up with a solution of something that works for you, or even just maybe just not had that stress on you about all those things that you can't
Yeah,
control.
absolutely.
Yeah. So well, I find that interesting that it's you were talking a lot about the jockey, or the person that is the lead in the company. I guess that's similar to real estate there, where you're betting on, if that person has a pretty good track record, I imagine you'd probably do a deep dive into what they've done before and say, well, this will probably work. That probably, how heavily does that weigh into you choosing a company?
Uh, I don't typically choose the companies like the investors do, but
Okay.
it's a big, it's a big factor because you can have a great product, but the management can run a company into the ground, or I
Oh
mean,
yeah.
the publicly traded CEOs really do a great job, and they, in a lot of cases, in many cases, are justified to get their huge pay packages because you can take a company that's in a real problem and turn it around if with good
Hmm.
managers. So management is probably the most important factor that people are betting on. And I don't know the exact statistic, but there's a lot of serial entrepreneurs in venture capital. So a lot of the founders have started and exited previous startups,
Hmm.
and that's a positive sign.
Hmm.
Um, so management is a huge factor, um, and then the product, and then other things. But it's almost a monopoly in a sense that you've got a large group of, I mean, a small group of large amount of capital concentrated in a small number of firms that
Wow.
they have this. If something starts failing, they just pump money into it until it works.
Oh
So,
wow.
so probably the biggest signal for investors, and I'm not endorsing this as a um, investment methodology, but they follow certain firms. So, like, if have you heard of InQtel?
Yes, I believe so. It sounds familiar.
InQtel is the venture capital company from the CIA,
Oh
and
wow.
they invest, I don't know how many billions of dollars every year, but they make a lot of investments. And some investors will invest in companies that they invest in, and it's public information, so it's no secret.
Yeah.
And then, or you could take a big firm like Sequoia or a venture firm that you like, and only invest in companies that they invest in, like Y Combinator. Um,
Oh yes.
Y Combinator
Um.
was a seed investor in Airbnb and Uber. So we
Mm,
have there's a fund that invests only in, they graduated, it's called like the winter batch of companies, and the fund will invest in all the companies from that season from Y Combinator. And so it's like hundreds of companies. And that's another approach, is you just kind of diversify into a bunch of them through a fund, kind of like an index approach towards
Hmm.
investing in private markets, because like the individual, like right now you would think that crypto is popular, but it's, even though the price of Bitcoin is high, it hasn't really affected Kraken and Circle and the crypto
Hmm.
companies. So Scott, is there anything else you want to share before we finish our discussion?
Um, Let me see. Just I always get the question, why multifamily real estate and why yachts? And people always ask me why I'm not doing one or the other. But I love both of them. Both of them give me unique opportunities to see the world and meet a lot of great, interesting people doing a lot of really positive things. And you know, a lot of people. It helped me out a lot just because I got tired of being around a lot of people that were very doom and gloom. Everything was very, everything's going bad. Everything's are not what they used to be, but things are always changing. And it gave me a lot of opportunities to be around people who are very positive and doing a lot of incredible things, and it just kind of gives me a lot of energy, and it makes me really happy to see, especially a lot of young people get a bad rap that they're not doing anything, they're lazy and this and that, but a lot of them, they've really optimized what they're doing, so they don't. I'm kind of jealous because they don't really have to do a lot of, they can outsource their entire life from their phone. So I'm a little jealous. It's good and bad. Phone is a good and bad double-edged sword. But I mean, we didn't have our kids have phones till they were later in life, and you can see some of the effects of that. But I think the future is bright, and I think I love doing both. So I'm going to continue to do both until somebody tells me that I can't. So I mean, if I mean, I'm lucky I get to do two things that I love doing.
That's fantastic. There's one expression I'll leave you with, that when someone asked one of the venture capital GPs what you do, because they didn't understand, they said, We turn boat money into yacht money."
Nice. That's great return. It's funny because you said a lot of times we just throw money at it until it works. We kind of have a similar mantra on the yachts because usually money is not so much the thing. Granted, we don't try to waste money, but time is usually the constraint. Like and there's that saying, you can either do it um, cheap, quality, or quick. You can do
Right.
two, but not three.
Yeah.
We usually do it expensive and fast, and because time is, you know, people say time is money, but time is time. Time is our most valuable resource.
Yeah. Yeah, that's interesting. Well, it was great to speak to you, and good to meet you, and look forward to prosperous relationship.
Yeah, that'd be great. I love to keep talking to you, and I love to learn more about all these things that you're looking into because there's so many ways to do it.
Yeah, absolutely. Well, thank you.
All right, thank you. Thanks for having me. Appreciate
No
it,
problem.
Joseph.